Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Consensus in Austin, Texas. Joining us for this segment, we have Manthan Dave. He is co-founder of Palisade. We're here to discuss the digital asset custody landscape. Manthan, it's great to have you with us. Welcome to TradeTalks.
Hey Jill, it's great to be here.
You got it. And let's get a broad overview of the digital asset custody landscape. What are some of the emerging needs that are recognized, and what are some of the challenges?
So currently the digital asset custody space is sort of divided into three high-level areas. One, we have the traditional institutions, so like banks. They are now doing custody. We see more and more European banks kind of like get into this role. They're either buying the underlying technology or they're coming up with their own. We have the crypto-native institutions or crypto-native custodians. So these are the companies that have been basically set up to custody crypto itself, and only for that purpose. We're one of these. And then we have technology providers, so companies that are providing underlying technology for custody so that people can self-custody assets themselves, or clients can kind of buy that technology and then self-custody assets themselves. We also do this in this space. But broadly, what we're seeing is that the people are realizing that custody is not necessarily just about sort of putting the private key in someone else's hands, but it's actually about risk management, and it's about compliance, and about ensuring that you have tools in place to safeguard not only your assets, but also your customers' assets in a way that they are safeguarded by someone whose only job is to safeguard them for someone else.
Mm-hmm. Tell us about your experience in the Web3 space, and how have you seen it evolve?
So I started in the Web3 space from a technology sort of side, but prior to that I got into it through the Ethereum yellow paper. Mm-hmm. That was around 2015, and I kind of got into the space looking into Ethereum, learned about the concept of a decentralized computer, and that was kind of very interesting to me at the time, because the idea was that you could have this decentralized system which allows you to not only put assets and sort of hold assets, but also being able to interact with other players in the space. You can deploy what's now called a smart contract, but it allows you to have an autonomous piece of code that's executing on a public infrastructure that can serve a variety of use cases beyond just sort of trading. Right. And I kind of got into that in that space around 2015. Eventually ended up joining Ripple in 2018. As a software dev, I built the on-demand liquidity platform there, which now serves around $1 billion in volume every month for cross-border payments. I left Ripple in 21, joined Alba Labs as a core protocol engineer, just to get more understanding of the Ethereum ecosystem. But one of the consistent themes that I've kind of seen is that the regulatory clarity has always been this thing that's been sought after. That's been like, people need that, and I think you have a lot of people in the space who are kind of anti-regulation or sort of anti-government. But we now are starting to see some of that come around, because as you see more governments giving clarity to people, those people who are kind of anti, you kind of see that it's more a product of resentment rather than something that they actually really believe in.
Well, I mean, of course, you want the framework, and we had a number of developments in the U.S. over the past couple of weeks, which has been encouraging, and for the U.S. in particular, the lack of framework is, there's been some talent in brain drain going to other regions of the world for that reason. Yeah. But even sitting here at Consensus today, the stage right behind us, Money Reimagined, it's been about crypto policy all day long. Yes. And I find that really encouraging, because it only helps to foster adoption, whether it's institutional or otherwise. But let's talk about the EU's new MiCA laws and that regime there, and how it's boosting ambition to become a global hub for crypto. Tell us about that.
MiCA is primarily geared towards just unifying all the crypto laws across Europe into a single regulation that all governments can kind of fall under. Prior to MiCA, we were in a space where you can get regulated in like Estonia, Lithuania, or some of the countries where it's much more faster to get regulated. You're effectively fast tracking to be in a place where you can start serving clients and customers under an umbrella of kind of regulation. And then at the same time, we had jurisdictions like Germany and France that were a lot more strict, and they had a lot more detailed regulation, much more harder to get into. And someone would ask, why would I spend 2 years getting regulated in Germany when I can get regulated in somewhere else in the 2 weeks? But now with MiCA, what it's effectively doing is kind of homogenizing that landscape, and it's saying, okay, well, it's not that it has to be so strict that you can't get in, but also it can't be that loose that you have no idea how to protect your customers' funds. And ultimately, I mean, let's be honest, like regulation is about protecting retail investors,
Right.
protecting people's funds, safeguarding assets. What Mika brings to the table primarily is this like homogeneity, which kind of makes it easy for people to follow a single rule. Particularly, one of the most interesting things about Mika is the stablecoin regulation, which basically is instructing custodians and stablecoin issuers to have sufficient reserves in place so they can sort of like issue stablecoins. It kind of shows that Europe is not only following the regulation and just making everything bureaucratic like it does, but it's also looking at events that haven't happened in the past, like the Terra Luna event, where something that looked like a stablecoin collapsed, and they're trying to look at that, and they're trying to put out a regulation that could prevent that.
Yeah. Well, I think doing it in a cohesive manner also makes sense. Some of the challenges that we have in the U.S. because the states will have different laws depending on even more local jurisdictions. It can get a little bit confusing. Let's talk about Palisades more specifically. What was the genesis behind it, and what kind of work are you doing within the digital asset ecosystem?
Yeah. So my co-founder and I have been in the tech space for quite some time. We met when I went on Ripple in 2018, and we quickly realized that we had similar synergies. We always wanted to build something in this space that could solve some of the core problems. We started with building a lot of use case oriented applications, but one of the things that we kept coming back to was around wallet management, custody. And when you talk about custody, you realize very quickly that it's actually not about sort of the technology behind it, but it's more about the regulation and the compliance, and ultimately, again, when you look at regulation, it all makes sense when you actually read the regulation around sort of like how custody works in UK, Europe. It's about making sure that you're segregating customers' funds, you're doing KYC, you're doing KYB, you are actually understanding your customers' needs,
which is reasonable.
Which is completely
right.
reasonable. So we were like, why don't we just effectively tackle at the root of the problem, build a asset custody which provides that to clients. But beyond that, what we want to do is because we are kind of tackle this from a regulation first, compliance first angle, one of the key things that we're also doing is we're saying, okay, well, there's no one technology that answers the question of custody. There's the technologies like multisig, there's a HSM, there's MPC. We see a lot of those different players doing those things in silos. And our approach is, well, we don't want to tell customers which one to pick. We'll just offer them all. We'll offer our customers all of them, and we'll let them pick and choose whichever they want. So now with Palisade, that's how we effectively got started. We're like, okay, we're going to build all these different online technologies. We're going to abstract that away. We're going to abstract away the regulation, so customer doesn't have to worry about the intricacies of the sort of like how things should work underneath the scenes. They should work on the intent. They should say, I want to do this, and then the platform just makes it happen in a safe, compliant, and secure manner.
And it's so interesting, that is a consistent theme that we're hearing all throughout Consensus. It's all about user experience. Yeah. You want to get from point A to point B and let the engineers and developers worry about the core infrastructure and be able to execute on the business at hand. Yeah. I think that's a big shift for the industry.
Yes, I think the narrative's changed massively.
Definitely.
And if you look at it, the technology on its own doesn't make any sense. Like, I think it's very cool to have zero knowledge proofs and like very deep technology. And I think you need that in the foundation. But then once you have that, you then need to look at, okay, how are we going to make this like possible? I had my dad come over. This was like 5-6 years ago, and I was like, I'm going to set you up a wallet. And he downloaded MetaMask, and I was like, okay, make sure you follow this sort of properly because you've got 24 words you need to keep safe. And he basically wrote it on a little post-it. And the first thing he does is he takes the post-it, puts it on the fridge. And I'm like, oh, what is this? And he's like, it's who's going to come into the home and who's going to look at the fridge? I'm like, well, this is, if someone gets hold of this, they get all your money. Mm-hmm. And he's like, well, can I just like recover the money? And I'm like, no, it's not like a bank that you can just call up and then recover the money. So I think the underlying message is that I think a lot of times the expectation is that the technology is complicated because the use case is complicated and the things that you can do is complicated. So people just have to learn. But I think it's unfair to expect 9 billion people in the world to upskill about blockchain.
Yeah.
The technology has to come down and it has to make it easy for a normal person to be able to like understand and to be able to use it in a foolproof manner.
I mean, it's the only way that you'll be able to scale, right?
Yes,
I mean,
exactly.
It's much easier if it's something that perhaps works like an app that you're familiar with, and for the end user, you just want to be able to transact.
Exactly, because at the end of the day, when a person comes home and they want to buy something, you don't want them to be like, oh, I'm going to buy this, I'm going to spend ETH, it means $10, but the gas fees are $5, so I'm going to wait for an hour. Like, from their perspective, they should just be able to buy something because that's what they want to do.
Yeah.
And Amazon should, or like whoever is on the other side should get their money as they're owed, and the system has to just support that. Like, you can't expect customers to worry about all the online details, which is why the way our platform works is it abstracts away everything, and it makes it very easy for clients to use, and for them to convey their intent, which is what they're trying to do.
All right, Manthan, we appreciate the insight. Thanks for joining us on
Thank you.
Trade Talks, and thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.